It is Friday, August the 12th, 2022. That was the week. And it was quite a week, as always. Keith, in the show today, I think we're going to have a little bit of sex talk, aren't we? We're going to talk about not only how unicorns are born, but perhaps how they're conceived. So some birds and bees talk, Keith. How do we get unicorns? What do you tell your kids about the origins of unicorns?
Well, they're built, not discovered. That's the key to it. Unicorns are built in a factory. In quotes.
They're not conceived. Don't have parents.
Well, funnily enough, there is one unicorn that was conceived of, which was Snowflake, because it was built at Sutter Hill Ventures as an idea, and they incubated it and gave birth to it from within the venture fund. But that's quite rare. That usually doesn't happen. This week was, whenever I read and it comes to Thursday, I'm busy these days, so it tends to be like 7 o'clock at night on Thursday when I start to look at the newsletter. I have no clue what it's going to be about, but this week there was this cluster of stuff. Bill Gurley, Malik, Hunter Walk, Samir Kaji, and a host of others, all talking about how we can understand who's good at making unicorns. And some of them talked about the seed investors, they called them emerging managers. Others talked about surviving downturns, all different, but it was all around the same theme. So it saved me, because until then I had no idea what I was going to write about. So then I wrote a whole editorial about how a unicorn's born.
So how are they born? Is it innovation, timing, luck, genius, people, technology?
It's all of the above.
Well, that's not news. Presumably, I mean, I already knew that.
Yeah, but when I say all of the above, I don't mean all of them all at the same time in every unicorn. I mean, every unicorn, there's one or more of those variables. The timing is, I guess, universal. If a company is badly timed, then Webvan is a great example. It isn't going to work out. You could argue that Amazon has become Webvan with all the Amazon trucks coming around. So clearly, timing and scale matter. Luck is massive. Who you manage to bump into, who invests in you. There's a lot of random luck. But I don't think you can really say luck and timing are key variables. They can make a difference between life and death, but then they're not the key variables. The key variable really is all to do with seeing an opening. It's not unlike Harry Kane. You have to see an opening and go for it.
And see it when no one else sees it. When the defenders don't see it and nobody else sees it, even the commentator or the crowd.
Exactly. And by the way, the outcome has to be enormous, like scoring and winning a trophy. The outcome has to be enormous. There's no point working hard for what can only ever be a small outcome. And we all know that work is hard no matter what the outcome you're going for. It's the same work. You may as well go for something big. And unicorns can only be made if the goal is a big goal. In the case of Now TV, nothing less than replacing the global news networks, CNN, would make sense as a goal. But that doesn't mean you start there, but that needs to be the goal. So then once that's the goal, every decision you make is shaped by it. So you start to make big calls, like how much money should we raise becomes a call. Who should we raise it from becomes a call. What should the go-to-market strategy be given the end goal becomes a call. So I think unicorns have to start with what has previously been called a hairy, audacious goal.
And why the week of August 12th, 2022? What's the significance of all these prominent VCs and writers trying to figure out why unicorns are born? Is there a glint of sunshine in the economy, Keith? Are people beginning to think people beginning to come out again and think, well, let's start investing, let's start innovating? Is that why there's so much, why so many different people are talking about the same thing?
I'd like to say yes, because that would be very tidy, but actually, no. I think it's mostly random. Samir Kaji, he has a new initiative that recently raised funding where he is trying to get ordinary investors to be able to fund emerging seed managers. So he has a self-interest in explaining why emerging seed managers are important. And his work, which is very good work, by the way, is all proving that if you invest in emerging managers, you're going to do better than the market by some way. And
What does that mean, invest in an emerging manager?
An emerging manager typically is somebody who was either a startup founder before or was possibly working in a big VC fund in a lower level and has now come out and raised their own fund.
So like you?
A little bit like me. I think there was a rumor recently that Thomas Tungers at Redpoint is stepping back from their new fund, which was announced yesterday that they have a new fund. And I suspect he's going to be doing his own fund. That's my guess. And he would be classified as an emerging manager, even though he's quite experienced, because it would be his first fund.
So Kedge's idea is to allow ordinary investors to invest in someone like Tungus.
Yeah, his company's called Allocate. I don't know if it's a company or a fund.
Why would Tungus though want ordinary money? Why does he wouldn't have any problem raising money? Why does he want to be bothered by retail investors?
Well, yeah, he's an exception. He'll probably be able to raise his fund within a week. But there are lots of emerging managers, like, for example, people that came out of Ron Conway's Silicon Valley Angel who are still in their 20s.
Yeah, but then you're dealing with the same old issue of people not really know, the blind leading the blind, people not really knowing what they're doing. I mean, it's back to the crypto scam.
Well, you're right, but Samir knows what he's doing. Samir spent many years at Silicon Valley Bank, and then he was one of the founding people at First Republic Bank. And then
yeah, but Samir's creating the architecture.
Yeah, but
he's selling the tools.
No, but he's also picking the emerging managers to back. I think he would be worth betting on, Samir. I do. I think he knows what he's doing, and his work suggests that.
And what's this got to do with unicorns? I mean, you can do well as an emerging manager and not even invest in unicorns. Or does it require now any successful investment? Must they become a unicorn?
I think that has to be the goal, because otherwise it doesn't impact the fund. A couple of stats are worth saying here. There's roughly a 1% chance of getting into a unicorn. This morning I've been working on the Signal Ranks data, and we score managers. If you were to select the top 100 managers that we score, your chances of getting into a unicorn become 40% likely. And these are all, small funds, smallish.
But this is not going to make more unicorns. So it's
about market share.
It's money chasing a limited market.
Yeah. So I think there's two variables to bear in mind. One is, yes, there's a fixed number of opportunities. The second is that fixed number is growing, not to do with investors, but to do with the world. As the world becomes a smaller place and the number of people connected to the network grows, even modest success makes you big fast. One of the points I like to make is that a single city is now big enough to create a unicorn.
Well, we have a message on our notice board. I don't know if this person's from Africa, but they said, and you have particular interest, Keith, in Africa. In Africa, we don't need unicorns. We need to make a difference.
Well, making a difference is measured in GDP, gross domestic product. Africa has collectively got quite a fast rising gross domestic product. It may well end up being the fastest rising about 10, 20 years from now. So a unicorn is simply a unit of measure of the growth in gross domestic
I mean, it's
product.
just another word to describe a successful company. What about this surviving in downturns? Again, we are, I guess, still living in a downturn. Malik and Gurley both writing about surviving in downturns. I mean, every time there's a downturn, we have these kind of articles. Any fresh wisdom here? What are they saying that we haven't heard 100 times before?
Well, I'll come back to that. I mean, I just want to tell you, Kino Kamid is the person who's commenting. Kino is a very, very well-known entrepreneur and analyst in Cape Town. He used to run his own radio show. I know him quite well, and he is entitled to say that what I'm saying is rubbish, which is what he is saying.
Well, he did. He said, rubbish. Unicorns feed a handful of people. He's right. Good
Well,
stuff, Kino.
well, what Kino will,
or maybe
what,
Kino.
what Kino will understand is that as the human race evolves and the division of labor evolves and productivity goes up, it's always going to be the case that less and less people feed more and more people. So unicorns certainly feed a lot of people indirectly, even though they themselves may have a small employee base.
Well, let's move on to surviving in downturns. What are these guys saying that's different?
Nothing really. I mean, Bill Gurley's just good
So
at
why
saying.
even? Yeah, I mean, why
I
link the articles? I
I'll
mean,
tell you
they
what-
come out. They could write the same article every time there's a downturn. Oh, stick to your guns. Be counterintuitive. Focus on revenue. Don't waste money. Blah blah blah.
So the reason is, I think there's two reasons. One is this is an interview that Malik did with Gurley when many years ago, and so the interesting thing is it exactly proves what you're saying, which is if you didn't know when it was recorded, you could have thought it was recorded now, except for the fact they're both a little bit younger. And however, the advice is the same, and it's the right advice. Don't run out of money.
Well, that's again, you don't need fancy VCs to tell you that. Obviously, you don't run out of money.
Well, you'd think that was true, but if you go back to most of these crises, the number of companies that die because they run out of money is quite high. And you take.
Well, I guess but these people believe that there's. I mean, you just need to understand that the money that was there isn't there anymore, so they can't just keep on going out and raising money.
Yeah, the hard thing you've got to hear as a founder is you aren't worth what you were worth 6 months ago. And if you raised money 6 months ago and you want to raise money again, it isn't going to be at the same valuation. And that's very hard to hear. You don't want to believe it's true until you're forced to. And quite often, the most stubborn entrepreneurs who sometimes are the best entrepreneurs, because being stubborn is a skill, just do the Thelma and Louise thing of driving off the end of a cliff. And so the advice may seem obvious, but it does need to be given nonetheless.
What about culture? You have David Weiden, who I don't know, and Ben Horowitz, who I do, on culture. What does that mean? What are they writing about?
They're writing about how to build a company where the team are focused on the right things. It's extraordinarily difficult. You and I did a startup called Santa Cruz Networks back in the day, and we had, I don't know how many employees, 20 maybe, or maybe even less than 20. And when you think about as we were doing sales and building product, and it was difficult, right? It didn't always work out.
It was
the team.
More than difficult. It was impossible.
Right. So the team, how they respond to adversity is a key part of whether the company succeeds or not. And if anyone that gives up, that's not going to help. Anyone that points fingers, that's not going to help. So often it's called derogatorily drinking the Kool-Aid. Well, drinking the Kool-Aid shouldn't be derogatory. You almost have to drink the Kool-Aid to have a chance of succeeding. And so culture is really, on the one hand, self-reinforcing belief, but on the other hand, it's also learning from mistakes and fixing them. So there's this weird dynamic between being open to getting it wrong and fixing it, but being a believer. And that's a very difficult culture to create. And the bigger a company gets, the harder it is. And you look now at companies like Google, where there's internal warfare over whether to go back to the office and stuff like that. Most companies lose it after a certain point
What's
because
happening at Google? There's a civil war.
over whether to go back to work or not.
You mean go back to the office?
Go back to the office. Sorry, yeah. May be the case that those are the same thing.
And who's is it a destructive war at Google?
I think it's destructive of sentiment, right? If you don't love your employer, going to work every day gets hard.
Well, this issue of navigation in crises. I mean, you don't have to. I mean, you can be post-unicorn. You could be a multi-unicorn like Meta. I mean, in the news of the week, we've got all this new news about Meta. I mean, is Zuckerberg a good manager or not? Is he focusing on the crisis? Is he changing his mind? Is he changing direction? Is he a good builder of teams? None of this is different in a post-unicorn company like Meta, is it?
Well, what you should do doesn't change. That's the whole point of the Christensen book about what's that book called? The difficulties of innovate, the innovator's dilemma.
Yeah, the innovator's dilemma, which is the problem is that once you're an innovator, you need to continue to blow yourself up, and that goes against your instinct.
Right. So Zuckerberg actually is one of the best at doing that, but he's not a good manager. So it ends up being he creates a parade, and you either join it or you don't. And I think Sheryl Sandberg was his manager, who helped him navigate the management side of that, and she's now gone. So now, that said, the news this week about Meta is quite disturbing, even for me, which is that Instagram, specifically Instagram, has been letting you load web pages inside the app, but the web browser it loads is its own, and it puts all kinds of fingerprints all over that browser to measure you and to profile you without ever having acknowledged it was doing it. So that is a pretty big thing.
It's ironic for Meta, given that they're supposedly moving away from that business model, moving towards the virtual reality model of selling hardware or services rather than advertising. So they clearly can't get their own business model, their own surveillance out of their system.
Well, I think Meta is probably about 4 or 5 companies, and each one has its own team, and they're all going after their own stuff. So this could be an Instagram specific
multi-unicorns, Keith. There's many unicorns within Meta. Some will live, some will die. We're still living in a post-collapse economy. One of your items this week in News of the Week is Coinbase. I mean, every week there's more bad news about Coinbase. How much more bad news can we get before they just go out of business?
Well, they're not going to go out of business because they've got they quite rightly raised.
Well, they could if they get sued by the SEC or by their users for allowing the trade of unregulated crypto.
Well, the news this week is that they lost $1.1 billion in the quarter.
Is that a lot? I don't know.
It's a lot. Their revenues were only $803 million. Now, crypto has been going through a quiet period, and they make money from crypto trades, so that makes sense. But
that's the ultimate euphemism, Keith, a quiet period. That's like describing someone after they've died. You say, oh, they're going through a quiet period.
Right. Can
we think of another word to describe what's happening with crypto now? Death, maybe?
It's made quite a bit. I mean, Bitcoin is up about 20% from the bottom, and the bottom was at $20,000-ish per Bitcoin. And I can remember when Bitcoin was, in the hundreds of dollars. So I wouldn't say it's a crisis, but it's now trending back up, as is the stock market. Inflation is trending down again. So I think we're getting through this period that was nerve-wracking for everyone. And that
So
usually,
we've flushed out the disease, the thing that's wrong. We're back to a healthy economy. Do you think?
I don't think we ever.
Even in crypto, I mean, the rotten stuff got washed out.
There is some rotten stuff did get washed out, but I don't think that's what just happened. I think what just happened is institutional investors, the bulls and the bears, fighting each other for a brief period of time. The bears.
I thought that's how unicorns got born. Bulls and bears going to bed together.
Very good, Andrew. Very good. Do you want to elaborate on that?
No, I do that off screen. And then we're getting, the smoke is beginning to clear. So we're getting a sense after the battle of how many people died, quite literally. You have a graphic in News of the Week of corporate layoffs. What does the landscape look like? How brutal has it been over the last few months?
Very brutal. This is coming from a great website called Visual Capitalist. Where's my cursor? I'm trying to navigate here, and it's not easy. I'm working on two screens. Here we go. Found it. So this is the graphic, and if one scrolls through the graphic, one see. By the way, you're seeing a different screen than I'm seeing, which is kind of interesting.
Well, we're seeing some big. So the big corporate layoffs are at Peloton and Carvana.
Yeah. So basically, it's related to money. If you can't raise money, you can't pay people. Now, is your business any different than it was a year ago? No. But the resources you've got to run it are different. So you have to tighten your belt and lay people off. And these people that are getting laid off, by the way, are often great people.
But often they're getting jobs again. I mean, we're still not. I mean, when you say great people, a smart programmer, a good salesperson, they're not unemployed. They're easy to find another job.
The question is, what they really want to do, and this is advice that I will give, is they really want to go and work for a startup that's recently been funded. I mean, different people have different appetite for risk, but somebody that just raised, let's say, a $10 million Series A round or a $50 million Series B round, you want to go back to that stage in the life of the company where there's a lot of growth in its future. And then you build your family's wealth through making good choices doing that, unlike you and me who keep doing our own startups. So basically,
failed startups for me. You sometimes have success. I only ever do failed startups. That's my brand.
I have a fair number of those as well. So it is what it is. Anyway, so yeah, I think things recycle, but the funding environment has slowed down. The number of Series Bs in July and August was a massive shrink compared to earlier in the year, and very big shrink compared to last year.
But it's nothing compared to, say, 2000, the summer of 2000. I remember then everybody got laid off. Nobody had any work at all. I mean, it's an entirely different economy.
Yeah, it isn't as bad as that, even though people talk
and the money
about
disappeared completely, and there was only bad news. I mean, there is some good news this week, even in your News of the Week. I mean, Disney's grows its subscription base to over 150 million. So the economy, the digital economy, is continuing to kind of hum along relatively healthily.
It won't go away and it won't shrink because it's basically the future. When Andreessen says software is eating the world, you can imagine that as a pie chart of how much of the gross domestic product country by country is accounted for by the digital realm, and it's a growing amount. It's never going to be bigger than agriculture or manufacturing because those are huge. but they don't grow very fast. Digital is big and grows fast, and so it's the obvious place to invest and spend time if you want to grow.
Well, you've said that everyone, or at least everyone around here, wants a job in a startup. Who is the startup of the week, Keith, this week?
Startup of the week is Hamish McKenzie.
Wasn't he the startup last week? Have you got some sort of fetish with Hamish McKenzie? Is he paying you? Are you paying him?
Neither, certainly not paying. The fetish thing might be true. It's not to do with money. I thought it was funny this week because last week I praised him. This week I'm going to question him. Has
he replaced Paul Graham in your heart?
No. Although
no one will ever replace Paul Graham.
Paul Graham is increasingly speaking in a tone of superiority. Makes me not like him anymore.
Okay. Well, Hamish is still a decent fellow, right?
Yeah. Now, Hamish changed his title to Chief Writing Officer.
Ooh.
I think that reveals a blind spot in him, unless his interpretation of the meaning of it is different. He said here that he thinks good writers are easily as valuable as good engineers. Now, a writer has an audience, and an engineer, in a way, does too, because they write code in software. Engineers typically are behind huge companies.
You just got an invitation, Keith. It said, Keith, you're super impressive. If you have time, I host a networking event for founders and investors every Wednesday night. Why doesn't no one ever invite me?
I don't know.
I'm obviously not super impressive. Anyway, you should, this Mark November, not Mark August, Mark November is inviting you. So you can do that. So back to Hamish. Sorry to change.
Back to Hamish. I think Hamish has a blind spot, which is, the best writers don't create as much value as the best engineers. It's just a fact. That said, writing is important and valuable. But I think for Substack, they also need a chief readers officer, because the purpose of Substack is to distribute writing to people who can engage with it. And so, whereas you might want a chief writing officer that focuses on the quality of writing, the writers themselves, how much money they're making, and there's lots of good news around that with Substack. I think they definitely need a chief readers officer. And one of the articles in this week's Unicorn section was from Hunter Walk, was how important it is for a startup to understand marketing and communications. I think Substack's weak spot is that it doesn't fully understand marketing and communications.
Do you think that Substack and Hamish are going to survive now that Salman Rushdie was stabbed? Because he was one of their big writers. And he's a Spurs fan, by the way. Did you know Salman Rushdie?
Yeah. When you say, by the way, you just said something. Did he literally get stabbed?
Yeah, today.
Yeah. Oh, I haven't seen it. What happened?
Someone stabbed him.
Is he dead?
I don't think so. You mean like a unicorn?
No, but you can't make jokes about that, Andrew. So,
I can make jokes about anything, especially Salman Rushdie. I mean, he is a Spurs fan, but I know that Substack had invested in him. So maybe, we should probably send our condolences to Hamish, who's our startup. So you're treating Hamish McKenzie as a startup rather than Substack?
Correct. He's starting his new career as chief writing officer, and I'm just giving.
But he's not a brand. Substack's still bigger than Hamish.
Oh, somebody says you're also impressive, Andrew, just so you know. Irina.
I didn't get invited to events. Huh? Oh. Well, I led into that one. I'm not loved enough, but I'm just jealous of Keith. Finally, Keith, Hamish is our startup of the week. Who is our tweet of the week?
Tweet of the week is from Chris Harvey. His Twitter name is Chris Harvey ESQ, which, as we Brits know, stands for Esquire. And it goes back to the unicorn question at the beginning. His specific tweet that I is at the bottom here. These numbers blow my mind. As an asset class, VC puts up 15.5% internal rate of return as a median for 10 years. The variance is between 0 and 32.8%. VCs rank number one in performance for several years, with emerging managers at the top. I mean, there's no truer venture bet than investing in emerging managers. And he's on the quote from Samir Kadji with the charts that show how big the venture ecosystem has grown year by year or era by era over the last 10 years or so. So it goes back to the performance of emerging managers. And
yeah, can I be, if I have a title for that was the week, can I be Chief Emerging Manager?
You could be, actually, yeah.
And what are you?
I'm just Keith.
You're just the CEO, founder. And we couldn't have a show, Keith, without mentioning our old friend Elon Musk. Everything you need to know about Musk's lawsuit against Twitter. Is there anything to know? Is this boring?
Actually, it's worth a read. It's The Guardian in the UK that published it, and it goes through in quite a lot of detail, section by section, what Musk's claims are against Twitter. And when you read it, you certainly believe he's in with a shot of winning the case against them. I saw him do the Tesla earnings call, the shareholder meeting last week, and he's super upbeat, super confident, still very impressive. And I definitely am not counting him out of beating Twitter. And if he beats Twitter, I think Twitter's in trouble because it means they've been lying to Wall Street.
And certainly, I don't know about you and I, but Musk has had a good week with the passing of the bill, or the imminent passing of the bill, makes electronic vehicles central, and innovation around electronics vehicles central in the economy. That's the ultimate unicorn. Keith, there'll be more unicorn talk.
Hey, Andrew, just before we go, that bill is heavily tied to U.S. assembly and U.S. battery parts, which is a big kind of, it means most cars won't qualify.
But Tesla, I think, is in a stronger position than some of the other companies.
That's right. That was my point.
And anyway, it's understandable. They want to innovate in the American economy. They want to reward innovation in the US rather than overseas. Well, that was the week for August the 12th. Things are beginning to get back to normal. And we will see you all again. Lovely audience. Lots of compliments to Keith and I. We will enjoy seeing you all next week, August the 19th. Have a great week, everyone. Keith, you too. Tottenham Chelsea on Sunday. Looks like that should be an interesting game.
Yep, and Man U are playing away at Brentford.
So the less you say about Manchester United, the better.
Exactly. Bye.